Happy New Year. Good morning. Let's get started. New all-time highs. It keeps going up. Well, keep going up until it doesn't, right? That's how we look at it. And so, starting with the futures here, as we most of the time do, look congestion area. And I think that one of the themes in the letter over the weekend was, while we look at long-term charts that have gotten extended and suggest a pullback, I think that what we need to see, and I'm wondering as we come into the new year whether we're going to see this now, is the daily chart accelerate since it's been in this kind of what I call a self-correcting uptrend. And a self-correcting uptrend, for those who don't know, is one in which it's an uptrend. It's making higher highs and higher lows. It tends to keep you second guessing because it has slow momentum in the way it does it. Obviously forms red bars. They pull back very little. It's got overlapping bars. There's tails that occur, and this one isn't as pronounced as others that I've seen, but it would meet that definition because the way it goes up, looks like it could pull back further. It doesn't. It makes a new high, but not significantly, and it comes all the way back in again, and it's slow. And so now that we've got this wider range bar, I think it's on the S&P the day it gapped up, but the sideways, and now it starts moving up. Friday had that the Thursday end of day buying into the close that made it a green bar, and it's not moving that far here just yet. But this pattern is one in which historically it could accelerate to the upside. And just look at the back a little bit where it pulls back, and then the big bar sideways at the top of the bar, continuation. And it's like, okay, you've had pretty much this corrective phase of chopping sideways, and now we view this as an igniting bar. It's a wide range bar with very small tails, larger than any of these bars, kind of like this, somewhat, not exactly, but somewhat like this, a lot bigger than what it preceded it, and a little pullback. And while this didn't move up like what we're talking about, like look at this, the hourly chart, boom, straight up. And then as it tries to go down, you get a big red bar ignored, and you get a continuation pattern. So maybe this is what occurs here, and then we get a short-term top into the at the beginning of this year. We shall see. Tomorrow we've got this election drama that's been coming and everybody's waiting for. So that certainly can have an effect. I imagine there's a lot of positions hedging. And, as we look at everything that's going on here, it was part of what I wrote about in the letter, is that the underpinnings of this bull market, as wacky as 2020 has been, and what we did is going back to, yearly charts and monthly charts and weekly charts and daily charts, and looking at trends. And, while sentiment gives us that short to intermediate term heads up corrective phases, the true underpinnings of a bull market, which is based on interest rates, are not bearish. And so any corrections along the way, until that actually changes or we start to see a bit of a change. And one of the things I mentioned to you about a week ago was to set an alert on this chart. I think it's here. I think so. Anyway, you're going to want to keep an eye on going into this year is short-term interest rates and long-term interest rates. Because if this chart, which is basing down here at the lows, down at nothing here, no one is expecting the Fed to do anything. I don't, right? Um, who knows what might begin to change, but you want to see if this begins to move up. And of course, if we start to see uh, even the 5 year, this actually start to move down, that's where we're going to have to be thinking, hey, something is changing here, the underpinnings of this market, and something much more bearish can happen. On the other side, setting alerts on this, and does it start moving up, which is what we want to see. We want to see TBT, and with all this liquidity coming in, some signs of inflation and really signs of an improving economy and interest rates starting to rise. So with short-term interest rates so low, and the idea is pumping all this liquidity into the system, other than just, making the stock market go up, how about, real people benefiting from this and, you know, take off the masks, just keep washing your hands, of course, send people back to work, open up restaurants, bars, so on and so forth. And these interest rates start to rise. And so the real, not concern, piece of information that we need to be keeping an eye on are these numbers down here, that they don't start coming together. You can see where they're at here, 3-month, 5-year, 10-year, and they're stacked up the way that they should be, lower to higher. And if these start to come close together, that's a real easy way for you to know the underpinnings of this bull market are beginning to come apart. We don't have that right now. So we continue to look at the trends. And as we do that, and as you start from high to low, right? Everything is still up. And so we mark off major areas of price support and just follow along. And we do that across multiple markets and multiple sectors, and then see the alignment of uptrends when multiple time frames or mixed, or if anything's in a downtrend in multiple time frames. And right now, there isn't anything. So, okay. And SPX today. S&Ps are going up. So they can go as high as buyers keep pushing. There's no signs of stalling here. There's little pullback beginning here. So how far away can you get to do a call spread? Well, I don't know. I haven't even looked yet, but just considering measured moves, one of the things to look at is where is the highest open interest? Where is that around? So I would guess around 3,800. There you go, McGraw. I'm guessing a whole number. McGraw saying 3,800. So selling call spreads above 3,800. How far away can you get? Where is there enough premium? Right? Credit spreads are the easiest thing in the world, to kind of figure out a strategy as to what to do on zero data expiration day, especially. What's the chart say? What's the open interest? Um, you know, where's the premium? How much risk you want to take? Yeah. So McGraw's telling me 37.75 is actually the most open interest, which is good. So if there's premium above 3,800, all right, so the way I view that is, okay, the highest open interest is at 37.75, right? And then 3,800 is a giant whole number, whatever. Not like 4,000, but look, it's an obvious stopping point, just a psychological number. So if there was premium up above that, that's where I would say the no-brainer level is. Yeah, and exactly what Steve is saying. He says, but they bite real hard when wrong. And that's the downside of a credit spread, is that, look, if you want to be a bigger risk taker, get closer to the danger, you'll make more money. But if it doesn't work, you're gonna, lose a few moving parts. So, um, so I'd rather, especially with this instrument, you know, have enough blockers in front of me. And so above 3,800 should, I would assume, would be good. Even just the size of these moves, um, even a wide range bar, which this kind of a pattern could get a wide range bar, but you're already forming part of it. So if you just added this bar's range to this current bar and projected it upward, 3,800 would be safe up above. Now the downside, I would say below 3,680, give or take. Right, so you've got 3 days of support. You've got the middle of this and 3,720. So we got a whole bunch of little pivot lows there, just, sitting there protecting us. So 3,680 is way down there. 3,680 should not be touched. I don't think you're going to find any premium down there. Anyway, I think you got to go down below here. Right, so you've got your support areas here, and then you've got a significant support here intraday. And so down below here is where you're going to want to be. And you'd have to look at the options table to see what might be below 3,700 area. Probably would be a significant point if we got something ugly. Right, so with a credit spread, try and imagine the worst. Right, even if it punches through here, it would, if depending on how it fell, right, fell hard in there, it's kind of lean on like a flimsy fence, you kind of bend over a little and then you throw it back up again. So there you have it. Fuse, uptrend, kind of boring. It's the same everywhere, pretty much. Well, we know the Russell got a little bit of a shellac, but you've got some significant support down here. Little stall here, pre-market. Yeah, Dan will take a look at Frog. He likes frogs. YouTube. So same consolidation at the top of the wide range bar, beginning to push back up again. And what's happening here intraday, right? Buyers should want to step up here pretty soon. And Dow beginning to take the lead. Finally, the most boring chart of all of them, just chopping, chopping, chopping. Finally clears and it's moving up. And we've got a weekly chart with a shakeout bar down here. So should not go below last week's low. That's for sure. So that's your initial line in the sand there, disconnected. So clearly, this area is a significant support area that we have. And buyers would be here on the way down, but we've got that same continuation pattern. And it's not supposed to come down here. It's supposed to go sideways if it's truly strong. Right? You come out of a consolidation that is like almost 2 months, prices should not pull back that much. That's one of the things we want to keep an eye on today. Again, with tomorrow, I don't know when these election results come out, whether it's like after the close at nighttime, we all find out, but we know there's a lot of big things in play there, and tomorrow could be a wild day. So keep that in mind. And pull back. Maybe the Russell, I don't, the way it's going up here, kind of choppy and grinding and come up to resistance. So I'm not so sure about that or doing anything there. and it's been sideways for a few weeks. Now, these bonds we've been talking about, it's been the same old story for a couple of months now. Uh, Prices pulled back to this swing low, and it's like, okay, obvious place for buyers to step up, and they haven't done that. And historically, when you start going sideways like this, and you get the initial move down, and I wouldn't call this a climactic move to the downside at all on the weekly chart. You can see on the daily is more of a grind of a sideways down retracement, back whip, 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 whip. Right? And so it could still go either way, but when it can't lift off for so long, and again, we're new year, I don't know whether we're just waiting for the new year, the seasonality. I don't know. It just gives me a little pause as to the typical, well, if you can't go up after this amount of time, retracing to major support, odds are it's going to go down. And so in reality, that's what we want to see as far as, the bull market goes, because if this moves down, these are prices, interest rates go up. And maybe tomorrow we'll look at another chart with yield curves, but while the yield curve now is not super bullish, it's in a safe zone. And by this going down and interest rates going up, it will spread that apart and kind of puts more of a cushion under the market. And it doesn't mean there won't be corrections along 2021. There certainly will be. But based on the interest rate environment, they'll be contained. But that doesn't mean certain stocks won't get real ugly. Oil, just flatlining here. Not much to go on there. And gold, excuse me. Wow, rally mode. Yeah. Okay. Not where the heavy lifting is. Let's see what that does. See if silver's already cleared. Looks good. Jake's been in that. Last week he said, I don't mind waiting. He's been in this leveraged silver ETF. Congrats, Jeff. You've been playing that for a while. It's paying off. Very nice. Transports, another one of the flies in the ointment of what's going on here. See what happens on this sideways move after this wide range bar. Right? There's an alert up here and an alert down there. And so while everything still looks okay, we've got sentiment still telling us, be careful. And breadth has been deteriorating. This market won't give up an inch. So same story as we left off last year. Keep an eye on the exits. It's been kind of choppy and grinding. And, maybe this week's news kind of sets things in motion where things start trending one way or the other. All yours, Dan.
Good morning and Happy New Year. Yeah, so when we were scanning over the weekend, you'll see in our subscribers know that we're still extremely bullish too until it's not. It's just crazy bullish sentiment out there. Hey, Bill, your drop down, please. And when I was reading the journal this morning, the cover of the section B business page says, investors are betting on I forgot what it said. They're betting on everything rally. Everything. So everything's going up. Just buy whatever you want. Everything's fine. And that's just another example of bullish sentiment that everyone's bullish. All right, so for our open trades, we have a couple condors when the market was trying to crack one day last week, and these look like little bear flags. And then we were selling out of the money call spreads, and then we quickly the next day. So SMH and CAT are two examples. We have condors. See this breakdown right there is when we sold a call spread. Our condor is 185 and we have 175. So we want it to stay range bound, but you know, you're always concerned with one side more than the other based on the chart. And right now I'm more concerned with the call side, but so that I'm just showing you the problem ones. Tan was one. We also did a call spread, and they're the 110s. So at least based on the pre-market price, we have $4.40 of cushion. But now, since it's red bar ignored and two more sideways days and now gapping up, maybe 30-minute high, I will look into legging into a condor on this one. So those are the only problems, like potential problems. Everything else looks fine. We have a huge amount of bullish new trade ideas in both letters. In fact, we had gold in our ETF letter, and you know I hate big gaps because they mess up our entry unless you say, well, just buy it, whatever, and because it's the same stop. You know, I understand that, but I take just I'd rather keep an eye on it and try to get us a better entry. Frog, yeah, frog. We have a condor also. So I'm not sure what your question is. It's opening flat, so that's perfect for our frog. But for a new trade, YouTube's saying frog may jump. I don't know what gives you that opinion based on the charts. It's a bearish consolidation here after breakout failure, which was why we legged into a condor. We started out on the put side on this one on the breakout day. And then we sold an out of money call spread to leg us into a condor. So our condor prices here are 70 and 60. And it's at 63 right now. So I have no interest in that as a new trade. You know, I'm always looking at the Dow 30 here just as a representative sample of, hey, what's strong, what's jumping out at me, talking about frogs. What's jumping out is unusually strong or weak. This is the only drag today, Boeing. Intel and Coke down pennies, Cisco down 16 cents. So this is the only drag. You know, don't know what to do with that. Diego, MU long intraday. It has earnings this week, so the daily's fine. Daily had a, so you know, I gotta say Thursday because Friday was no trading. So Thursday had a nice wide range breakout. So you just put it in a 5-minute window and see how it sets up. That's all. But sure, yeah, semis are strong. Semis breaking out. We have Abgo as trade ideas. Look at that. It's just a beautiful consolidation. Red bars ignored and a strong uptrend. So that's an idea. Thomas. All right, and on today, yes, we got a couple here in WFC. Yeah, that looks great. And this is Binom. You know what this was? I actually gave this as a long, I forget what day, and I canceled it. But now I'm putting it back on the list because it looks like it has a price void on the weekly and monthly. And that's Wells Fargo. XLF looks great. We're already in this. And I also gave it as a new trade idea, a bull call debit spread. So yeah, it looks good. I'm calm. I can't see where it's gapping, but yeah, it's a breakout. I like the action in the weekly and the monthly too. So I'll put that on the list. Hey, Debbie. Someone's asking about NEO on YouTube. Yeah, this whole sector's moving here. I gave this to our green room on this 2-bar reversal. that, and we said, you know, the weight of the evidence, it should go through this prior pivot. Oh, that was a nice higher low reversal. You got LI. Don't like that pattern, but same sector. XPEV. No great pattern. Solo. That one's looks the weakest. Aurora. We're in this one, but it's also lagging. Bitcoin. Look at Bitcoin's crazy move here. This, I guess, was over the weekend because it's still trading. Look at this crazy move. Went up to 34,000 and then got slammed. So Riot. I wish I got us into this core way down here in the low sixes. INOV. Alarm. We're in Redfin short. So that's that looks great. We're in this one short, relative weakness continuing. Looks great. So I'll be tightening the stop on that. FCX, TFC. Yeah, FCX. Yeah, that was in our letters. It's a textbook 1, 2, 3. Textbook. So you know if you look at the markets here on the 15-minute chart, though, you know they're extended short term. The run here from this range expansion bar right there after 2 p.m. 2:15. And I actually took off the last 2 hours. Look at that. Doesn't that typically happen? You take off and then the market does something huge without you. Well, there's exhibit A right there. But that was very tradable right there. And I said, I don't know what is going to happen in the last, you know, window dressing the last hour. But it's extended short term, even though it's at all-time highs. So my point is the level of your aggressiveness, you're just going to have to adjust your stops accordingly. Me personally, I'm going to wait here a little bit because we have a gap and crack bar in process under we're going under pre-market support now. I keep losing pre-market here. What the stupid thing just keeps moving on me. So see, we're trading under pre-market support now. So I'm chilling here on new trades. My 15-minute charts, a bunch of them are selling off. Jake, I said, pan, and we have our stop. And I said, I'm going to be looking to leg into a condor on that. That was one of my 3 problem children I discussed pre-market. Laser, John, you're going to have to ask me what you're thinking. Just for a swing, I wouldn't touch this unless it got over the red bar. Jake, does your mic work? I just answered you. I don't know what you are asking me, Jake. I talked about it already. We have our stop in. It hasn't at the stop. And I said, adjustment strategy will leg into a condor. I'm not sure what else to say. This was my only short in the weekend. And look, gapped up, relative weakness. On Dash, we still have a call spread. That's red. Beyond, we have a call spread. That's red. Those are all acting fine. I'll go through later and tighten up stops. PSX, this was a 1, 2, 3. Well, John, but if you're talking about the, what's the symbol again? Oh, laser. But you can do 5-minute high on PSX because it's not extended. And see, that's what I do when I go through here one by one and adjust things. Okay, but John, we're pattern traders. Whatever time frame you are trading, that has to be the compelling pattern. So our teaching methodology is there's no pattern on this daily chart unless it takes out the red bar's high. That's why I asked you, what time frame are you trading? Now, if you were trading a 5 or 15-minute chart for a scalp or day trade, that's fine. Okay, John, it's just a pattern that I don't teach. So if you're asking me a Jets alarm, maybe that's because of Boeing. Let's look at Jets. Okay, John, so fine, then you should trade the pattern that you recognize. And but you asked my opinion and I gave it. It's over the red bar side. If it's a swing pattern. Now, if you have, something else in your back pocket, then in all due respect, go for it. Grimy, no, on this one, we'll keep the put spread open because but I will, yeah, no, John, definitely, I want ideas, absolutely. But Grimy, this one put spread looks totally fine, but I'll look at the premium. And if the premium is a nickel, then yeah, we'll go ahead and take it to avoid 4 days of risk. Well, the market is getting hit hard in the 15-minute chart on the cap. I mean, that's a big 15-minute bar relative. Look at the size of this bar. It's the biggest one since this over here, 1229. So you gotta take note of that, right? Hey, I don't think Gustavo's here, but I had an alarm on Redfin at 67. We were talking about possible targets. So you know what? Let's cover half over a day's high, and then I want to cover. Let's cover. Why not? Hold on. Let me do it instead of talking. Wow, look at Tesla all-time highs. What a beast that thing is. All right, par, you said? Yeah, it's a breakout. Lift. This lift is We bought that breakout last week and it's just going nowhere. All right, PSX over the high is now fine, 71.29. Yeah, and Baidu, I saw it was up pre-market. Cliff over the high is fine also, because then it'll be a red bar ignored. All right, so this actually triggered Jets. Yeah, Neo. Wow, Neo, yeah. And it has a price void. Neo looks good. It looks higher. That's a nice pattern. Look at this Fubo, still no reversal in sight. TSM, it's a gap breakout to all-time highs. TSM looks higher. All right, our Roku call spread is still doing beautifully.